Moving on with how to treat a double combination. And this is the second part of this mini educational series. I would like to point out that this is a complex corrective wave. This is being called a correction with a small x wave. And while on the previous part, or on the first part, we laid down the rules and how a double combination looks like, I would like to show you a classical example that happened on the euro and the US dollar on the 4-hour chart. After price first tested the 139, 138.30 area there. So this is basically the move from the high, so from these highs here and to the downside, but careful about this contracting triangle here. Now this contracting triangle actually ends here, and that would be A, B, C, D, E. Now, like mentioned on the first part, so we're looking for the move from here and to the downside. Our wave A is this one here, wave A. Then we have the B wave, and there you go, just like that. Based on the retracement of the B wave here, you know that this is a flat A and the B, a flat. B wave retrace is more than 61.8 when compared with previous wave A. Then just like that, we have a C wave to the downside, A, B, and C, and then the X wave. As you can see, the X wave here is less than 61.8 when compared with the whole correction, and it plays only the role of an intervening X wave. Now this is happening, or this move to the downside on the euro US dollar is happening or took place last year in October, and the reason for that is that the CPI in the eurozone here, CPI meaning inflation, came down. It was forecast to come 1.1%. The actual release was 0.7%, and therefore, because of the inflation has been way lower than the forecast, markets started to anticipate that the ECB, or the European Central Bank, is going to come and cut the interest rates on the next meeting. Now, well, that being the case, the next meeting was here. The ECB meets every first Thursday of every month, and the next ECB meeting came here. So as you can see, we had this was the CPI, a strong sell-off after the inflation, then the X wave and the ECB. And normally, if you put technicals to fundamentals, it was impossible here to go and buy call options, because all the expectations were that the ECB is going to come and cut the interest rates based on the lower inflation. Well, the ECB came, it did that, it cut the interest rate, but price, so this move to the downside actually happened in something like 10 minutes or so. And then from that moment on, the price started to rebound and even went to make new highs there, as you can see, 138.80, and then even new highs, 139.60 that we had not that far away. The reason for that is that on the press conference there, Mr. Draghi tried to, the president of the ECB, tried to play down the risks associated with the CPI, saying that the inflation actually is expected to increase gradually over the next year. Nevertheless, that hesitation here with the press conference translated with the market, with the bears pushing to the downside, but failing to break levels. And as you can see, you have a series of higher lows. This is a low, then you have a higher low, and then you have a higher low. So basically, this is your second corrective wave. Now you already know, or you already should look at something like this as a double combination, because this pattern here is a flat, but this pattern here is not any type of flat. This pattern is an elongated flat. So please go back on binaryoptions.net.au, look at the trading strategies that work on our playlist on the official YouTube channel, and search for trading elongated flats, and you'll see that this is an elongated flat. The thing with these elongated flats stays with the fact that they appear as being the entire leg of a contracting triangle or only part of a leg of a contracting triangle. Well, in this case here, it is part of a leg of a contracting triangle. So after the x-wave and the move like this, we knew already that a contracting triangle is going to come. So on this degree, right? So after the x-wave and the move here, all we need to do here was to look for the B to D trend line to be broken, even though this is a 4-hour chart, so patience always pays there. So normally A, B, then we set the C wave to the downside, then the D wave to the upside, A, B, C, D, and the E wave here, and that is your contracting triangle. Now, any triangle travels within the A and C, and the B to D trend line. So actually, what we need to do, or how to trade this one, is to be found on the next recording, on the third part. So please stay with us here on binaryoptions.net.au, showing you what a double combination is and how to trade binary options in general with such a pattern.